I want to continue this discussion on what Bernanke and the Fed can do now to help the economy. Joining us is Jim O'Sullivan, Chief Economist at MF Global, and on the phone, Bob McTeer, former president of the Dallas Fed and also a CNBC contributor. Bob, let me start with you. Renowned investor Mark Mobius said that the U.S. economy may avoid a double-dip recession if the Fed intervenes. My question is, should it intervene at this point?
Well, I don't think it should intervene with a big label thing like a QE3. But what they should do is just remind the markets that under normal circumstances, they do conduct monetary policy and that they are on the case, and that if it's necessary to do something, they will. It's very important that they not let their assets run down right now and have an inadvertent tightening. I think it's important that they have some growth in their total assets, but I don't think they ought to be announcing a big program because the market, rightly or wrongly, has decided that those don't work. I disagree with that. But
Jim, we're looking
the market has it.
I'm sorry, Bob.
That way.
Jim, we're looking for the Fed to help us solve our problem with the market turmoil right now. What is that problem?
Well, I mean, certainly weakness tends to feed on itself with confidence going down. I don't think there's any question that this whole debt limit saga has affected confidence on Main Street as well as Wall Street. And already, of course, confidence was looking on the shaky side. I mean, there have been some hits to the economy which arguably are temporary, with Japan's supply chain effects, the jump in oil price at the beginning of the year. But obviously on top of this is now the debt limit saga, the downgrade. So it's all feeding on itself.
So do we have Ben Bernanke come out and say the only thing that we have to fear is fear itself? Or, what's the issue that we're expecting them to say here to solve our crisis?
Well, he certainly has to, I think, signal a bias toward more easing. I think it's unlikely that he actually pulls the trigger at this point on action, but he certainly has to say something that's soothing and certainly does suggest that they're on the case and that they are prepared to act if needed. It's not clear that they're ready to act yet, though.
And what about the law of diminishing returns? It feels like, Bob, that no matter what they do at this stage, it may not have so much bang for its buck.
I think that's right. I think what's more important is that the president go ahead and get these committees in Congress appointed, the super committee, and get them to work on longer-term fiscal issues. We don't need short-term fiscal austerity, but we need people to start working on the $4 to $5 billion grand plan that will bend those cost curves, and hopefully that will do something for confidence in the future.
If anything, Steve, Ben Bernanke has said that if there was ever going to be another quantitative easing program, he would be mindful of the inflationary implications of that. And I don't see any inflationary pressures at this point. Do you?
I don't, but I think that the thing that Bernanke would really bring him to the fore here is the fear of deflation. I think that's his biggest concern about monetary policy in general, the idea that you get into a deflationary spiral. That's the thing I think that would definitively bring him in, and I don't see that happening right now. In fact, quite the opposite. I think the issue is that their hand is stayed a little bit by the misbehavior of core inflation relative to their expectations. And Bill, I just want to get back to something you said earlier, because I think you made exactly the right point. Nobody knows what the answer is because we're not sure what the question is. Exactly. Is it a problem of the downgrade that's hurting us? Is it the fear of the economy? Or is it Europe? If we could get that question right, we could have a debate about the answer, but nobody's sure what the question is.
Yeah, that's a really good point. Thank you very much for that, Steve, and the rest of the team.